refinance it, and then cash flow it as a rental. And so I think one of the big things that you have to realize is that if you don't own assets and you don't figure out how you can begin to own assets, then you're going to always be somebody else's asset. And until we have that mindset shift that we got to be able to increase our ability in order to earn money while we're sleeping and invest in assets that's going to pay us while we're sleeping, then we're going to have to work until we die. And that's not where we want to be, especially when we have access to the information that can allow us to change our lives and be able to live life on our own terms, accomplish time freedom to buy our time back by being able to have these assets that's working in the background for us to pay us capital on a monthly basis, or on a stay by stay basis. We start looking at some of the short-term rentals and mid-term rentals, or however it may be. And so that's what we're all about, that we understand that real estate investing is that vehicle for us to get there. And so I think, kind of going into the mistakes, the top mistake that I had was, kind of understanding, you looking at money, you got money and capital, which, at the tip of the surface, that you kind of look at it, that you think that, they're the same thing. And so, but they're completely different. Whereas that if you look at money, money is made to be spent on as a consumer, to be buying different items. But you look at capital, that a business invests capital with the expectation that they're going to get a return on that money that's being deployed. They're buying equipment, they're buying assets that's going to bring back a return on an investment, versus money is just being spent from a consumer standpoint. And I think that was the big piece that I had to understand was, hey, money and capital, that, if you don't have financial intelligence, like Rich Dad said, Robert Kiyosaki, money without financial intelligence is money soon gone. And we see that all over the place where, lottery winners, they get a large amount of money, but they don't have financial intelligence on how to manage that money, how to manage that capital. Or we see professional athletes, they have a great skill set, but they're horrible. They never learn how to manage money or how to invest money. And, they squander their riches away, and they get taken advantage of just for not having that information. And, the Bible, I'm a true believer in what the Bible says, that it says a fool and his money will soon depart ways. And if you're not out here trying to find the information, if you're not out here seeking wisdom, then that's foolish behavior. I'm not going to call you a fool, but you got to get about your business. And I think that's one of the biggest things that we have to look at when we talk about mistakes being made, is we don't have a true understanding of what the use of money is and capital, and what we should be doing with it. We should be deploying money, whereas that now is bringing back more capital to them. And essentially, you look at your money as an extension of you, because guess what? We're trading our time and energy in order to get paid money from an employer. But now our job is to employ that money and deploy it out there, whereas that now it's bringing back, 7-8% return on every dollar that's going out there, is bringing you 7-8 pennies back every year or more, if you find, you're able to find great investments. And so that's what the job is, that we understand that, hey, our money isn't made to be spent on depreciating assets, just on things that we can hang up in the closet, or we can put on our feet, or we can ride around in. But no, it's really to be deployed and invested in a way that we can reap the benefits and reap the return on that. And so that was kind of the first one. Rich Dad, Poor Dad was that book for me that kind of changed my thought process about money, about investing, about businesses, and the relationship with being able to build passive income in order where you're not dependent on your job and your actual physical ability in order to be paid, where you can cover your bills. And so I think that was the big one for me in regards to the mindset piece. But I think, looking at the mistake number 2, it kind of goes hand in hand with that a little bit more. But it's like, once we started going through that process, we started doing renovation projects, we started flipping houses, and we got to the point where we need to scale. It was, okay, how do I go about soliciting other private investors or private partners? I like to call them partners, because any investor that comes and provides capital and comes into our deals, they're a partner. They're a partner, whether it's the bank, it's a hard money lender, or if it's a private individual, they're a partner in the deal. And that's how we approach it. But one of the other kind of large mindset shift that I had to make What the mistake was that when you're talking with people about money, I felt like I was asking people for money. It's like, hey, do you want to go in the deal? Almost feel like you're begging people for money. But as I matured as an investor and looked at the services and what we do and what we provide to individuals, that we're providing them an opportunity. We're not asking or begging for money. That, hey, we're coming in with an opportunity that if they're an astute investor, they'll recognize that, hey, this is a good investment for me. When they're looking at their retirement horizon, they're looking at their goals, they're looking at you as your experience level as an operator, and does all those things align? It's like, okay, now this is a great opportunity. They know what you're doing. Boom, I'm giving you my capital to invest in this deal. And so I think that was one of the other mindset shifts that I had to come in and to realize was that, hey, it's not always you coming to it with a deal, but now it's actually going through. I'm presenting you with an opportunity. And whether you want to take the opportunity or not, that's up to you. So I think that's one of the things that kind of got me going, was like, hey, take it or leave it. We can negotiate the interest rate, the return. We can talk about those things. You can share your retirement goals, your goals that, your expectations and your horizon for investment, how soon you want to be paid out. We talk through those details, but at the end of the day, you're presenting an opportunity to someone and not necessarily asking for money where they are from that vantage point of where you are presenting with the deal. I think the next mistake, kind of getting to the third one, is understanding, hey, where is the money at? And I think that was a big one as well, too, that there's a lot of different places that have money that can invest in your deals. The course for a lot of people, when I talk to people in my network, most people start with family and friends. When they start talking about bringing on investor partners in their deals, that family, friends, and then outside of that, the money itself, we could be in a savings account, it could be in a certificate of deposit, a CD, it could be in a money market account, it could be in a retirement account. A lot of people right now, they have 401ks and retirement plans with previous employers that's just sitting there. They don't know what to do with the money. And one of the avenues with a lot of our private partners that we have, that they leverage self-directed IRAs, where they move that money into a self-directed IRA. They have a custodian where they can direct it in certain investments and invest in real estate. And that's how they partner with us on deals, that they'll invest capital in a fix and flip project, an apartment building, or whatever the asset is, and they'll use their retirement account, and all the money and the returns go to the retirement account versus their normal checking account. And so that's a great avenue for people to fund your deals as well, too. But just understanding that also that banks, they're in the business of lending money. They make money by lending out money on deposit. We just saw with the Silicon Valley Bank that everybody started wanting their money back. And guess what? They didn't have enough money on deposit because all that money was deployed and invested in bonds, in this case, that were negative yield. And when they had to go sell these bonds in order to pay everybody out, they had to realize a loss because the bond yield had changed. It had shifted and reduced just with the rapid increase in interest rates that the Federal Reserve had done over the last, pretty much over the last year. And so we see that now that they're in the business of lending, and you have traditional banks, it's a lot harder to get, underwriting and approval for an asset that may be a house that you're looking to flip, a house that needs a roof. It won't pass the inspection because a lot of times if you're looking for like a traditional loan, that these banks, that they want to have a solid roof, they don't want any issues with it, no foundation work, and it's got to be inhabitable from day one. And we know as real estate investors, we look for a lot of the dilapidated houses, the worst houses on the block, in order to make sure that we can get a return, we can go in and add value. And so I think that's one of the pieces that you need to realize. There's different places where you can find the money. I think one of the next best lending institutions is the hard money lenders. That you see a lot of those lenders that are out there right now across the board, where that they'll lend you money on the asset, some with no money down, you just pay the closing costs, all the way to some that may want you to put 10 to 20% down, depending on the project. And most of them will give you 100% financing on your renovation budget, where you don't have to come out of pocket for your renovation at all. But they lend you the money based off your experience, and then also based off the deal, just the numbers on the deal that you can achieve, with you going through and managing that project and being able to sell it or refinance it in the future. And so that's a great avenue. And then, of course, you got the private individuals. We talked a little about that and where their money may be, but that's a great opportunity. Whereas now you're able to go in and understand that there's money all over the place. There's an enormous amount, trillions of dollars out there looking to have a return. And so I think the more that you open up your aperture and understand that mindset, that there's money out here for you. There's money out here to do the deals that you just, if you show up and put in the work, you get the knowledge, you get the skill, that there's different ways that you can go through. But I think the understanding from an investor mindset of where money is versus capital, and understanding what the purpose of money is, understand that you have opportunities. You have opportunities that you present to investors for them to come on and partner with you on the deals. And then I think also, looking at it, understanding where's the money and what is the best source of the money that you need for your deal. And it all goes to relationships, having those relationships with the conventional lenders, with your hard money lenders, and then also with private individuals that can step in and provide the necessary funding in order to get those deals done. So for me, those were kind of my top 3 mistakes that I kind of went through, and a lot of that was just mindset and not knowing, and had to get that knowledge on where you can go, who you can go and build those relationships, getting outside of your initial network, but getting out there and understanding where you can bring on partners and deals in order to scale up and to do bigger deals and to do larger deals. Whereas that now you're able to one, allow people the opportunity to invest with you and get a return on their money, but then also 2, you're not having to come up with all the capital yourself by you being able to have the ability to partner with people. So I think those 3 are kind of the keys, if you will, to kind of getting going and understanding from an investment standpoint on how to go about thinking about money, but then also an understanding the different resources that you have at your disposal, where you can go find the money and the capital that you need for these deals in order to get things done, to get projects closed out and done. So, and I think really, as we start looking at the shifts in the credit market, with banks tightening up their lending standards, over the next 6 months, potentially, as we kind of go into a recessionary period where, just transactions begin to drop off, that being able to have multiple sources to fund your deals is going to be a must, in order to make sure if one says, hey, yeah, this deal no longer fits our criteria right now, that you have somebody else that you can go to. And so I think being able to kind of diversify your resources that you have access to will only allow you to be able to be more flexible in the future with being able to get deals done. And there will be deals to get done across the board, but you got to make sure that you understand what are you doing, what are you underwriting, and then also only do good deals, because we only look on good and looking for good and great deals right now that underwrite, and I think if you're being conservative and understanding where the market is, and you're working directly with brokers and wholesalers, and then also doing your own direct to owner marketing, that you're gonna find success. So I think those are kind of the slides that I had. I wanted to tee up and just bring and see what questions we got. Any questions online, inside Zoom with the those in the community. Faye, I want you to just definitely share that. I'm gonna drop that in the chat where we can they can come up online and we can kind of have a conversation and just answer any questions. I don't see anything online. I'm seeing here on StreamYard right now. And while we're doing that, definitely for those that are online watching the stream, that definitely consider joining up with our REI Genius community. We got them in Zoom. We're about to bring up anyone that has any questions. But the big thing, we got a lot of resources that are at your disposal. I know one of the things for everybody kind of watching tonight, I'm gonna give you guys a link to my mistakes, like the 7 mistakes. I put this report together a few months ago, but just the 7 mistakes that I made in building a $10 million real estate portfolio, just to kind of share with you, because everybody, they talk about their success. But what I found from with my clients that I consult and help, that people learn more from your mistakes than all the good stuff that you've done. which is cool to understand. Yep, you got this deal and everything that went right, but tell me everything that went wrong. And I think that's the biggest thing, to be able to learn from other people's mistakes and to go forward with understanding, hey, the thought process that somebody went through in order to do a deal that goes a long way towards you being able to implement that in whatever you're doing with your situation. And so I think that's one of the things that that speaks to me. So I'll share that link with you guys that hang around to the end. You can get that link to the off my website to get that. If you guys are looking for a community, you know, trying to understand, I think next week we're going to talk probably about underwriting, how to analyze a deal, how to pick your real estate investing market. I call it an area of responsibility. But it allows you to understand what you should be looking for in a deal, how to go and analyze a zip code to understand your real estate market, and just give you that information. But that's what we're all about with REI Genius, that helping people tap into their inner genius when it comes to real estate investing, and giving you guys all the resources that you need to be a smart investor, an informed investor, and having a community around you that can help you be successful. You know, when it comes to, you know, just underwriting deals, the calculators that we use, the contracts, all that stuff that you need, and just having a community. We have brokers come in and talk about different markets. We have the community with people networking, doing deals together, building partnerships. That I'm a true believer that iron sharpens iron, and that's what we continue to build with the community. So definitely check out the REI Genius community. We would love to have you in. We do master classes. And we do different events inside the community as well too, just to kind of help you guys get going. So, because you shouldn't, the last thing that you want to do is be out here trying to invest by yourself, making mistakes, costly mistakes that can set you back on your journey with building wealth. Is the last thing that you need to be doing. We're trying to figure it out on the fly by yourself. Essentially, you're trying to jump in the airplane and figure out how to fly the plane to get to the other side of the country. Versus, you know, aligning with somebody else that has a plane and a pilot license. You can just jump on and be a passenger and kind of go for the ride and kind of in a safe environment versus trying to figure it out by yourself and having to crash land, to use an analogy. Faye, do we have anybody on the Zoom side? Any questions there? I hadn't seen.
There's a great question from Monica. So let me unmute her so she can answer this.
Okay. You share the link too, and I can bring her up in the studio. I'm gonna take this slide down.
So I'm a little under the weather. That's why I put it in the chat. But
okay.
I have a few potential investors that have TSPs. And I just wanted to know what the process is for assisting them with, I guess, transitioning it to the self-directed IRA, or if that was the only method.
Great question. Are they still active?
Yes.
If they're still active, the only way, so they could, without being penalized, they could take a loan against the TSP and pull capital out that way, and would have to pay back the retirement account. But until they leave service, then a lot of times they may not let you do a transfer out of TSP into a self-directed IRA.
Oh, okay.
Yeah. So the way that you could do that is really just get a loan against the TSP. I think you can do a loan up to like 50,000, which is fine. And then you just pay it back. And so they could take that money and put it into a self-directed IRA, or, you know, invest the capital that way and just pay the loan back if it's a short-term loan or something along those lines. You know, with like a fix and flip project or renovation project. Or they could just go ahead and get the loan and invest in a long-term deal and just pay it back out of pay the loan back out of pocket. And so they just kind of figure out, you know, what works best. But that's just a strategy on how you could do that.
Okay, thank you.
No, great question. Yeah, because that's the thing. We're like, so many people have access to retirement accounts that they don't never think about. When they think about resources and what they have access to in order to get deals done, the last thing they sometimes forget about, you know, the retirement accounts as a vehicle to kind of get there. No, great question.
We have a question from the back end. So how would you approach someone when you're actually raising capital for your deals?
No, that's that great question, because that's kind of the where it starts at. And the really the approach, and I tell my clients and kind of going through that process, that you want to think about, people that you know in your circle, and really to start that conversation is, really is asking them, hey, what are your retirement goals? Or, what do you think about retirement? Have you thought about, hey, do you guys own any real estate? And just really, when you're having these conversations, you want to listen way more than you're talking, and just understanding, one, what is this individual's goal? What are they looking for when it comes to their retirement? What are they trying to accomplish? And from there, they're going to really tell you, hey, I'm looking to retire 10 years from now. I'm not really looking at, cash flow right now. I'm just looking for, probably long-term appreciation, assets. We're looking to just grow more over time. But I think the thing that the conversations that I have with investors, that a lot of them, they're heavy in the stocks and bonds and kind of light on the real estate side, just because it's a whole lot easier. It's a whole lot easier, especially when you're, full-time employee, you're working, and a lot of times you can't just be going out riding your neighborhood looking for fixer-uppers, and you're not calling, 5 brokers a week to ask, and inquire about off-market deals. And so a lot of them, they invest in the stocks and bonds, but eventually, many people, they look at, and I think that's where the advantages of real estate, that the passive income and the benefits. And I think the more that you understand the benefits of real estate and can have that conversation and able to convey that to the individual, that it just shows them that, hey, they're missing out potentially, especially, when you start having conversations about taxes, and you hear someone talk about them paying taxes way too much to the IRS, then that allows you to step in and understand, the benefits of real estate that you can share from the tax perspective. Because a lot of high net worth individuals, they invest in real estate just because they need the depreciation to go against to wipe out some of their income. And so I think that's one way to kind of go into that conversation, but really just asking people what their retirement goals are, and from there drive the conversations like, okay, you got a tax problem, or you're looking to, diversify. Okay, you need more cash flow. And the more that you listen to people, you can kind of understand how real estate can kind of come in and help them. And it may not be a good fit, but I think really just having that conversation and understanding what they're looking for in retirement, and then just sharing a potential deal that you have done in the past, one that you maybe were looking to do, and just kind of sharing how you can help solve their problem leveraging real estate.
Got it. You ready for the next question?
Yeah.
So will you find deal first or raise capital first?
Both. You gotta be doing both. I think, one of the things that you got as a active real estate investor, that you're looking for the deals, but you're also you're talking to people, you're updating people. And I'll take, for instance, like one of my good friends that's in one of my mastermind groups, that they're not actively doing a deal right now, but they're sending a newsletter out monthly to all their investors to let them know, hey, these are deals that we looked at, we said no to. They're looking at different, sharing, hey, I just read this book, I attended this seminar, this conference, we talked about XYZ, whereas that they're staying top of mind, even though they don't have a deal right now, for them to invest in, they're letting them know the education that they're doing, the deals that they're reviewing, that they're saying no, because as investors, we say no more than we say yes. Because there's we see a lot of deals that just don't meet our criteria, that aren't a good fit. And so just sharing that process that you're going through with investor goes a long way. Whereas that now when you come back, if it's 2, 3 months, 4 months, that now you sent the newsletter every month, you talk to them about the other projects that they missed out on and how those are performing, you're sharing that on a recurring basis. And now they understand that, but at the same time, you're talking with brokers, whether it's 2 or 3, 5, 10, just depending on how aggressive you want to be each week. You're following up with people. You're sending out direct mail. You're sending out text messages. You're cold calling. You're driving for dollars. You're looking for vacant houses. You're going to the courthouse and pulling data for like pre-foreclosure, code violations, divorce, all those different indicators of somebody being in distress that has a property associated with it, that you're doing those things simultaneously. So it's a little bit of both. You want to be working to find that next deal, but you want to be keeping the potential investors abreast of what's going on, what are you doing on the real estate side, and even sharing, hey, what's going on in your life? Hey, we just had a kid, we just relocated, or whatever it may be. Just where is that you're continuing to be a rapport with that individual and kind of keeping that relationship warm. Great question.
What are your thoughts about raising capital from friends and family?
Raising capital from friends and family, that's where I started. That's where I started at with investing